Hello everyone, we are Group 3. The topic we are going to share today is prepayments and accruals. I am Yo-Yo.
I'm Jessica.
I am Gia.
Prepayment and accruals are both generated from the accounting method of accrual accounting, which is one of the two main accounting methods. So to start with, we shall first get a brief introduction of what is accrual accounting. Accrual basis accounting recognizes business revenue and matching expenses when they are generated, not when the money is actually received. This means company record revenue or expense it when it is earned or incurred, not when the company collects it. This is also the biggest difference between accrual accounting and cash accounting. It also means recognizing expenses when the company incurs the liability for them, not when it pays them.
Prepayment is an accounting term for the settlement of a debit or installment loans in advance of its overall due date. A prepayment may be the settlement of a bill, an operating expense, or a non-operating expense that closes an account before its due date. A prepayment may be made by an individual, a corporation, or any other type of organization. Accruals are revenue earned or expenses incurred which impact a company's net income on the income statement. Although cash related to the transaction has not yet changed hands. Accruals also affect the balance sheet, as they involve non-cash assets and liabilities. Accrual accounts include, among many others, accounts payable, accounts receivable, accrued tax liabilities, and accrued interest earned or payable.
There are two types of accruals and prepayments. In accruals, we have accrued expenses and accrued revenue. An accrued expense is an expense which has been incurred but not yet paid for by the end of the period, while an accrued revenue is a revenue earned by the firm which has not yet been received by the end of the period. When it comes to prepayments, there are prepaid expenses and prepaid revenue. A prepaid expense is an expense to be incurred in the following period, but which has been paid in advance, while a prepaid revenue is a revenue to be earned in the following period, but which has been received in advance. Where do accruals and prepayments appear in a statement of financial position?
First of all, we will take a look at the current assets item. We're recording prepayments and accruals in a statement of financial position. Prepaid expenses and accrued revenue are included in the current assets part. Prepaid expenses is a kind of current assets because it is the expenses that will be used in the near future but have been paid beforehand. Accrued revenue is also a kind of current assets, as it is the revenue that was generated but not yet been received. After that, we shall take a look at the current liability part. Current liability includes accrued expenses and unearned revenue. Accrued expenses is a kind of current liability as it is the unpaid expense that has been used up. Unearned revenue is also a kind of current liability as it is the revenue that has not been generated but has been received in advance.
In general interest, as accrued expense refer to the amount which you have paid but haven't yet. Therefore, is a kind of current liability. We should add the accrued amount to the total expense amount at the year end. Therefore, we should debit the expense account and credit the accrued expense account.
Where are prepayments and accruals recorded in double entries, which are done before preparing the income statement? As an accrued revenue refers to the amount that has been generated already but hasn't been received yet, it is a kind of current asset. We should add up the accrued amount to the total amount of the revenue at year end. In a double entry system, the debit side of the revenue is add. As prepaid expenses is the expenses that will be used up in the future but have been paid beforehand, it is a kind of current asset. We should subtract the prepaid amount from the total paid expenses amount at the year end.
Unearned revenue is also known as revenue in arrears. It refers to the amount that will be generated in the future but has been received in advance. Therefore, it's a kind of current liability, which is subtracted from the total revenue amount at year end. We should debit the revenue account and credit the prepaid revenue account. Now, after learning all the concepts, we shall set an example for practice. Insurance paid for the year ended September 13th in 2012 amounted to 12,000. Prepaid insurance on the September 13th of 2011 amounts to 500. Prepaid insurance on September 13th in 2012 amounts to 900. So what shall be the total insurance paid for the year ended September 13th in 2012?
The answer is 12,000 plus 500 minus 900 equal 11,600. Because we should add $500 as is the prepaid brought down for last year's. It is a part of the amount that should be paid this year. At the same time, we should subtract $900 as is prepaid carried down for the next year, which is not a part of the insurance expense we should pay this year.
This is the end of our presentation. Thank you. We hope you have learned more about prepayments and accruals.